This is a broadcast of SmallCapVoice.com, a financial communications and investor relations firm. SmallCapVoice.com receives payment for investor relations and financial consulting services that it provides to its clients. You should assume that officers, directors, and employees of SmallCapVoice.com or financial analysts mentioned and their families hold a position and intend to trade in these securities for their own accounts. This is not an offer or recommendation to buy or sell securities. Information in this broadcast is presented solely for informative purposes and is not intended to be, nor should it be construed as, investment advice. As in all investments, an investment in the featured company carries an investment risk. Listeners should review the company thoroughly with a registered investment advisor or registered stockbroker. This broadcast does not purport to be a complete study of the featured company or other companies mentioned. Information used and statements of fact have been obtained from the featured company and other sources but not verified nor guaranteed by SmallCapVoice.com as to completeness or accuracy. Such information is subject to change without notice.
You're wired in. SmallCapVoice.com. Following is a presentation of SmallCapVoice.com, today's leader in investor relations, capital formation, and retail support. Now, with your online business briefing, SmallCapVoice.com's Stuart T. Smith.
Well, everybody, thank you so much for joining us here today at SmallCapVoice.com for another online business briefing, where today we're joined by Jammin Java Corp. They're doing business as Marley Coffee. Marley Coffee, you can learn more about them at their website, marleycoffee.com. The company trades under the ticker symbol JAMN, and we're joined by the Chief Executive Officer for the company, Brent Toevs. Brent, how you doing today?
Fantastic. Great to be back, Stuart.
Hey, great to have you back, and it's been a long time since we've talked to you, and it's a great time to talk to you because your company recently put out your unaudited year-end numbers alongside a very comprehensive shareholder letter. Thank you for getting those out. Most companies, including yours, historically usually wait until the due date to put out any kind of information like this. Any reason why you guys turned it around so quickly this time?
Well, we're excited to share our story with our investors and our shareholders. And as we've matured as a business and as a company, we've really improved our accounting department, and they've just done a great job to be able to close out our books a lot faster. So, what we put out is unaudited. It's projections, but we're right in the middle of our audit, and the 10K should be filed on time. So we wanted to put out those preliminary numbers and again share our story. We think we've just accomplished so much this year, and wanted to share that with the investors and our shareholders.
Well, let's talk about those highlights. What were some of the biggest accomplishments for your company over the past year?
Well, I think just our growth. Revenues topping out at $10 million for the year. We've been able to do this, with a lot of hard work, but also staying true to our principles. And, first and foremost, we want to provide a great tasting, sustainable coffee with a philanthropic purpose. We always want to give back. And so I think we've been able to successfully get this out to our consumers and really compete in a very, very competitive space. From a taste perspective, we've won a few awards this year, the Soil Association Award in the UK, the 2014 Great Taste Awards. Again, validates that we have a great tasting cup. And on sustainability, we've done more and more with the Rainforest Alliance organization. We're also going to introduce the My Cup series, really focusing on farm to cup. And we're going to launch that coffee on our website this year. So we continue to try and make a real impact on people's lives in coffee-growing countries and regions. We think about Jamaica, really our roots. We continue to contribute to the Chepstow School, which is right beside the coffee farm. We announced our WaterWise initiative this year, which donates back to coffee-producing farms in Ethiopia. And since May, we've been able to donate over $83,000 to that initiative. And, of course, 1 cent from every real cup will continue to go to WaterWise. We've got a documentary coming out. Rohan Marley's the ambassador for WaterWise, so WaterWise and Mother Parkers filmed that documentary. We're going to release that later this year. So, we're so excited about all the things that we do. We continue to grow, but we want to make sure that we stay true to our roots. And it's interesting. We did a independent consumer research study. It was done for us by global research partners. And I'd love just to go over a few of the highlights if I could.
Absolutely. Go right ahead.
So it did it studied a dozen of the top-tier brands, including, of course, the competitors that are multi-billion-dollar brands. And it showed that Marley Coffee right now is doing the best job of converting trial into favorite brand status. And it also ranked Marley Coffee as the best brand for word-of-mouth advocacy. And it stated that 82% of the consumers who tried our brand recommended it to somebody else. So those consumer research studies, they're a little bit nerve-wracking because they're independent. You wait for the results back, but we were very excited to get the results.
That's terrific. Thank you for going over that for us, Brent. Now let's go back into those numbers. Can you highlight some of your financials from this year for us?
Yeah, I think if people really want a lot of detail, go back to the shareholder letter. So it's found on our website, marleycoffee.com, or at Yahoo Finance. You can put in our ticker symbol. But again, we've grown to that $10 million mark. That was our goal, and we achieved it. So 67% growth from last year. And now we've stated we think we can get to 17 to 20 million for the upcoming year. So revenue continues to grow. We've talked about exponential growth, and I think we've achieved that. So our focus this year, obviously, is to continue growing, but we really need to get profitable. And so if we look at our gross profit this year, it's gone up by 236%. So we're obviously on the right track. We're trying to be more efficient, and operationally, I think we're doing that. Well, I know we're doing that. So our quarter-over-quarter revenue growth has increased significantly, but it's also outpaced our expenses. Those shrank compared to fourth quarter from a year ago. So I think realistically, Stuart, we can get all the way up to $40 million in revenue without growing our SG&A by much more.
That's a terrific statement, but your losses increased, and we know operations can do that. So you anticipate, it looks like, if I'm reading correctly, reporting a net loss of approximately $9.3 million for the year. That's a pretty big number. Brent, can you shed some light on that?
Yeah, big is a good word to describe it. They definitely were big, but we have to remember that a big chunk of those losses were from the equity transactions with Iron Ridge. So, I know you know this, but it's not unusual for a startup company to go through large losses early on. We have to scale up the business. So, I think the key for our company is looking to the future. Our losses are narrowing, and our goal is to get to cash flow positive by the end of this year. So we anticipate net losses of approximately $1.4 million for this quarter, which just ended January 31st. Compare that to last year's same quarter of $4.1 million. I think we're making a lot of progress. And again, if we can continue to scale our business, we should have a fantastic year with regards to that.
That's really encouraging, but to make the jump from 17 to 20 million in revenue seems high. How do you expect to get there, Brent?
Yeah, certainly it does, but we're excited about the prospects, and there's a lot of ways that we plan to get there. And one is really just growing the business that we have and then expanding to some other key accounts. So, I think the team has done a great job getting into some large accounts, really some anchors. So think of accounts like Safeway, Kroger, H-E-B, Wegmans, Albertsons, just to name a few. We've done a great job getting into those accounts. We're also testing some new channels within retail. So we're doing a test right now at Bed Bath & Beyond, Sam's Club, and Target. We're targeting with machine manufacturers like Remington. They recently released their iCup series, which is just a phenomenal machine. So we'll work with them, to leverage that relationship and partnership to grow our business. International has been very, very exciting. We just have some phenomenal partners in the UK, in Chile, South Korea. Chile's just expanded into Peru and Uruguay, and we now have a new partner that's going to cover Mexico and Colombia for us. So international will continue to grow. In Canada, we're just ecstatic about our partner, Mother Parkers, has just been phenomenal, taking the brand not only to grocery, but now expanding it into the food service arena. So you look at grocery, we have around 2,000 accounts. Major retailers, some phenomenal independents who really get the brand. Some colleges have come on board. Some great restaurants are now serving Marley Coffee. So again, having these strategic partnerships in these markets is key. We're also going to be innovative. I talked about the UK a little bit. We're getting ready to launch our Nespresso-compatible capsule. And again, with the sustainability theme, it's going to be the first Nespresso-compatible capsule that's biodegradable. So we're going to launch that in the UK and then expand it out to Europe.
Well, once again, lots of information right there and a lot of business out there. And I think you've been talking about all of these things for some time. We've been doing these interviews with you for the past few years. It's great to see that you got to 10 million. But I want to jump back where we talked a little bit earlier about getting to that next threshold of, let's say, 20 million. And you said you could even see 40 million on the horizon. If you could isolate what it's really going to need to happen, what it's going to really take to happen, to move the needle and make that jump, what would you say it would be?
Definitely our partnerships. You look at the different markets that we're in, some that we're in a little bit, but we have so much room to grow in. Hospitality, the OCS business, we're looking at some strategic partners that will really help us take off in those channels. Mother Parkers, again, finding a long-term strategic partner, like Mother Parkers, and sticking with their system instead of going to another provider. It's not just about, say, single serve with them. It's about growing our brand in all of these other channels. So, we think that is obviously going to be a real pillar to our growth. But really the big thing from single serve is Eco Cups, Stuart. We really believe that Eco Cups are going to be a game changer. As we look at the consumers and the consumers drinking coffee in single serve, there really is a shift going on right now. Single serve is growing, but a lot of people are getting frustrated with the environmental damage that's being done. I just watched the Kill the Cup video. I'm not sure if you've seen it or not, but the magazine The Atlantic just put it out again, an article this morning on the K-Cup, and really the damage that it's doing. It's a $10 billion a year cup problem. If you put all the K-Cups in a row that went into landfill, it would circle the earth over 10.5 times. So as we get people to visualize the damage, we want to be one of the people that comes up with a solution. And we think the Eco Cup is going to do this. So we're going to launch the Eco Cup this summer, 2015. All of our single-serve products will transition into the Eco Cup, and we think this is going to be huge. We've talked to not only consumers, but we've talked to our retailers and our buyers. Everybody is so excited about this. The market leader says that their goal is 2020. Well, we can beat that by 5 years. So we're really excited about Eco Cup, and again, it fits in with our brand. It delivers a great tasting cup of coffee, but we have that sustainability side that's so important to us.
Yeah, but as a sustainable company, aren't you currently contributing to the issue now with your current cups?
Well, certainly to change the game, you have to be in the game. And, the consumer has spoken that they love single serve. And one reason, again, that we chose the Real Cup platform is we knew that technology, the goal of it was to get into a recyclable cup. So, again, we made that choice with Eco Cups in mind. It was a really big part of it. And, I just want to say something else, Stuart. The consumers speak by having a choice. They want to have a sustainable solution. But also companies have a choice. It probably would have been easy for Marley Coffee to kind of follow some of the other companies that have gone into the current system. That might be easy. It certainly, seems like that's where the dollars are, right away. But we're not all about just chasing the dollars. We think that with a little more hard work than maybe our competitors, and by choosing a system that's sustainable, not only does it make us feel great and get to where we need to be on the economic side, it really shows the consumer that we're in this for the long haul as far as sustainability is concerned.
Fair enough. Let's go ahead and change gears and take some shareholder questions. Let's talk about things like the stock price, Iron Ridge. Let's start with that. In your opinion, was the Iron Ridge transaction a good transaction for your company?
Yeah, I think it was at the time. You look at early stage companies like ours, financing options are very, very limited, yet every company needs capital to grow. So When we, met with numerous companies, certainly when we met with Iron Ridge, we really had, I guess, a great meeting of the minds. We understood, what they were all about and what they offered, and I think they understood about a lot about, Marley Coffee and where we wanted to go. So, we can review that. They purchased $1 million of our debt for equity, and that was March 2013. And then between then and the end of May, before we did that second transaction, our stock was basically flat. So even if they were selling through their position during that time, we were pretty confident that our shares could handle it. Then by the end of July, the stock was trading at around 47 cents, I think, higher than it was before the second transaction, which is when we did the third transaction. So again, when you look back at the time, we felt confident, and really so did the market. But as we've matured and evolved, we come up to, I guess it was last October, we settled out our transaction with Iron Ridge. So there's not going to be any more, any true-ups, shares owed, or dilution from this transaction. So we think that, getting rid of that overhang from the Iron Ridge transaction, hopefully that'll give shareholders more confidence in the long-term value of our stock.
Well, let's talk a little bit about the leadership. Why is Rohan selling his shares? I know there was 1 million shares that he gave away in 2014. Let's address that.
Yeah, it's a great question, and I guess you really have to go back to the start. You think of all of the investment that Rohan made in this company for many, many years. Most people don't realize it because, we tell the story a lot. Rohan started this back in 1999. That's when he bought bought the farm in Jamaica and eventually turned it into Marley Coffee. So from 2009, for many, many years, he did this without any compensation. So you think at what he sold, it's really less than 1% of his position. And, he's the most bullish person about this company. But, hey, sometimes people need some money, right, from time to time. So he sold less than 1%. And I believe you asked about 1 million in shares that he gave away?
Yeah, correct, in 2014. What was that about?
Oh, okay, that's right. So he gifted 1 million shares to his business manager for compensation, and it's our understanding that, he's held on to every share so far. And, even on it myself, we've received our bonus monies and shares, haven't sold any shares for over a year. So we're in this for the long haul. We're really, really confident in Marley Coffee.
Well, I appreciate your candid response to that, and that's got to be a big validation for the shareholders to know that you guys haven't sold a single share in almost a year. When we talk about exposure in this business, we could be talking about the company and its exposure into new investors in the markets, but let's not talk about that type of exposure. How does the company work on increased exposure inside the store chains that you're already in? In other words, are you as a company satisfied with the shelf space that you currently have for the most part?
Yeah, we really are, Stuart. We've focused on grocery growth. We've been very vocal with that. It's evident by the customer base that's been growing in that channel. But it's an ever-changing channel. Grocery. We've got to be nimble. We've got to be able to adapt. You look at what just recently happened with Albertsons' acquisition of Safeway. It got very complicated. You have one of the country's largest grocers and one of our largest accounts. Safeway, for instance, broke into 14 coffee buying divisions instead of just one. So that creates a whole additional layer of work for our sales, but it also opens up some great opportunities for a brand like ours, right? So we have to adapt, and we've made some changes and brought on some additional help with some brokerage company that we're really excited to work with, but we just have to be able now to refine and cater our marketing programs instead of going to one to go across several different divisions. So again, you can't have one strategy fits all. You have to be adaptable. You have to be nimble. And I think, again, for a smaller company like ours, it really is something that we can take advantage of. So we really, Safeway, really in all of our stores, we want to make sure that we're successful and move the products off the shelf. So I think we've done a great job getting on the shelf. We just got to keep growing the brand and moving product off the shelf. And again, I go back to EcoCup. That's going to be a huge differentiator between us and our competition. So that's going to be launched this summer. You should be seeing our Eco Cups on shelves late summer, early fall. Also from a marketing perspective, last year we spent over $1.2 million on listing fees, marketing programs. Now we really want to go deeper into our accounts. You know, we have relationships with our accounts. We're learning better what works as far as moving product off the shelves. Our marketing director has put in place many programs that we think will help to do that. So from the data that we're receiving and our studies, we know that we're able to convert people when we expose them to our product. So that's what we have to do. We have to expose them to our product.
Well, Brent, that sounds great, and we definitely know the market is changing with new players and coming in, and you've been able to compete with the big players. But can you get more specific with us? How is this company going to move more product?
Yeah, we need to get product into the consumer's hands. So we're going to, drive trial and get those repeat customers. And we do that by utilizing proven in-store marketing programs that our retailers have. So, again, instead of just concentrating on getting on the shelf, we're working with them and their programs to drive consumption so consumers can really get a taste of Marley Coffee. We're implementing a 3-count sampling program at quite a few retailers. It's a quick grab-and-go 3-count that we're retailing at $1.99 with a coupon. So retailers love that incremental value that they can provide at $1.99, and it creates a great impulse buy. So, we think that'll really help getting people to try our product. We want to increase, or we are going to increase, our event marketing, our sampling programs. We have a street team actually in California right now going from Northern California down to Southern California. They're going to meet us at Expo West later this weekend, and what they've been doing is sampling programs, tastings, drop-offs. We want to keep doing this in key markets, get out in front of the consumer, and again, drive trial. We were getting involved in events that really speak to our customers. A few weeks ago, we sponsored the Icelandic Winter on the Rocks. We just finished sponsoring the 2015 Alpine World Ski Championships. We're working with the Rockies for this coming year locally. Think of digital and social. That's kind of a unique opportunity for us. You think of Rohan's social media, his reach, the rest of the Marley family, and our audience. It really gives us a platform to tell our story. And we don't want to just use social media to tell our story. We want to engage our users, right? So whether that's online, through social media, we want to do it in a meaningful way. And we think we have an edge really on even some of the biggest competitors because of our reach on social media. We'll continue to do good PR. We keep telling our story, and when you have a spokesperson like Rohan Marley, people want to talk to Ro. It's a great story, but it's a story that's rooted in reality. He's so passionate. So, whether it's Ro going back on CNBC, Sports Illustrated did a phenomenal piece. So if you want to go to marleycoffee.com, you can click on the piece that Sports Illustrated did. People are really interested in our story. So again, we have a great platform, to tell our story. And when you think about, again, I keep going back to Eco Cup. I think you can tell, and I hope our shareholders are just excited as we are about Eco Cup. We think it's going to be a game changer.
It sounds like it really could be, and it fits in so well with your company and all of its mantras about sustainability. Let me jump back. I probably should have asked you this one a little bit earlier, but when we were talking about Iron Ridge, currently, what are the fundraising needs for the company? I know in reviewing and speaking to shareholders, there's concern about dilution. They want to know, is there potentially a company buyback, maybe a share retirement, a reverse split? So kind of tackle those all in one shot. What are the fundraising needs for the company, and how does the company address dilution? Go ahead.
Yeah, okay, great question. Certainly there's going to be fundraising needs, but, right now there's no current plans for a buyback or share retirement. But we certainly are reviewing our needs long term. Right now, we haven't made any concrete plans, but certainly we're looking at everything, Stuart, and we want to make a decision that's good for the company long term, but also good for our shareholders long term. So you think of what we've done in the short term right now. We've been able to extend our credit terms with Mother Parkers, So we take our payables from 30 to 120 days. So this helps put $1.5 million in free cash flow back into the company. So something like this strategic funding from other Parkers, it really shows that they have confidence in us, and we have confidence, obviously, in them. But it's something that won't dilute, and it's something that's very strategic and is going to help us long term. But right now, we're really focused on getting towards EBITDA positive. So we know we've made some great gains, and the objective, if we raise capital, or when we raise capital, is to, again, scale to our success. So we look on the revenue side, we've gone from 6 to 10. We've stated we think we can go to 17 to 20, but as we scale up, we continue to bring in those efficiencies and get to EBITDA positive. We want to get to that positive cash flow by the end of this year.
Well, finally, of course, the shareholders want to know one thing. What are your plans to raise the stock price, Brent?
You know, I think we have to continue doing what we're doing, and that's execute. We want to raise revenue, but we also want to keep expanding. We want to innovate, but we want to become more efficient, right? We think if we can have a few more quarters where our revenue continues to rise, our losses continue to narrow, we think then that the street rewards us and brings in new shareholders and shareholder value. So again, if we can launch the EcoCup, keep being innovators, drive more users, not only to the category, but to our brand and switch to our brand, that's when I think we keep hitting those moments that will keep giving us exponential growth as we've always discussed in the past.
Well, like the letter for the shareholders, the end-of-year letter for the shareholders, this was a very comprehensive interview. To refer back to that letter, that came out February 26th. Use that ticker symbol, JAMN. Brent, like I said, I appreciate your candor and your responses to a lot of these questions. Some of them were very tough. You hit all of them. You didn't shy away. And as a host, all I can ever ask for is a guest like that. Thanks for your time here today, Brent.
Stuart, thank you so much. I appreciate it.
All right, for Brent Toevs, this is Stuart Smith saying thanks so much for listening.
SmallCapVoice.com, today's leader in investor relations, capital formation, and retail support, provides its clients with the highest level of service. Our audio interviews are disseminated to one of the largest opt-in audiences available today. How? We at SmallCapVoice.com believe in aligning and affiliating ourselves with other leaders within the investor relations community. By sharing resources, each affiliated firm is made that much stronger and each client is served that much better. Our focus is to identify and provide the very best financial services and solutions available to clients and their shareholders. For more information about our services, please call us at 512-267-2430 or visit us on the web at www.smallcapvoice.com.